Good morning. This is Larry McMillan with a market update on Monday, March 22nd, before the market opens. Well, stocks had moved to a new all-time high last week, but then near the end of the week started to stumble a bit. And the S&P chart is still positive. It's still in an uptrend, but it has fallen back below the 39.50 level, which is a little bit disappointing. But it's in the old support area. Well, it was resistance. Now it's support between 38.70 and 39.50. So as long as that's the case, it should still be able to regather itself and move higher. A close below 38.70 would be negative, though, and we are seeing some deterioration in the indicators. First of all, the equity-only put-call ratios still are on sell signals, and as we pointed out in the option strategist newsletter last week, it seems more aligned right now with the NDX, the NASDAQ 100, or QQQ if you prefer the ETF, than it is with the S&P. So we did take some bearish positions in the QQQ based on the equity-only put-call ratios. Breadth deteriorated last week, and we got some breadth oscillator sell signals as of Thursday. Surprisingly, even though Friday was sort of a nothing day and then closed on the downside, breadth was slightly positive. So that's somewhat interesting. And so we'll keep an eye on that. If breadth improves again from here, then that would be another good sign for the bulls. The cumulative breadth indicators are not at new all-time highs right now, although they were earlier last week. Volatility continues to be generally bullish for the stock market. VIX is still operating off that spike peak buy signal from earlier in the month. And the trend of VIX is down. It did probe below 20 a couple of days, but not very far below 20. A clear move below 20 would probably indicate a much slower volatility environment after that. But right now it's still quite high with S&P at 20 or higher. The construct of volatility derivatives is also bullish for stocks. The front month VIX future is now the April future, but it's trading well below the price of May. So as long as that's the case and the term structure slopes upwards through the summer, that's bullish for stocks as well. And the futures are trading at a premium. So overall, we're seeing a small amount of deterioration, especially in breadth. That probably wouldn't be good if that persists, but we'll see how that develops going forward. And a break below 38.70 would be negative on the S&P chart. But those things aren't necessarily going to happen. And right now, the bulk of the indicators are positive, and the S&P chart is positive. So we're maintaining long positions, and we will trade small sell signals around that if they do occur. So I invite you to visit our website. We have our new seminar series on, well, it's on streaming video that's available for purchase now as well. Thanks for listening, and have a great week trading.